The early investors of Bitcoin are leaving the space like rats are leaving a sinking ship. Bitcoin has not seen any growth for the last years, at least relative to other asset classes, at least relative to activity. And because of that, we see selling pressure we have never seen through any other bear market. The structure of the market has clearly changed, and I want to share the data that shows how we might react to that. Let's start off with the number of active addresses of Bitcoin. This has not grown since 2017. So in the last 8 years, the activity on the Bitcoin network did not grow. The Bitcoin price definitely did grow, right? We had the peak of 20K at the end of 2017. So the price made a multiple X since then. The number of active addresses did not go up. So something else than on-chain activity has driven the price up. One of those drivers was the adoption of Bitcoin not as a peer-to-peer cash, but as an investment vehicle for self-custody. That driver was very strong and it continued to grow post 2018. This is the number of wallets that have at least one Bitcoin. That moved from 700,000 up to above 1 million. And that very much helped the Bitcoin price grow as well. So again, the number of active addresses peaked much earlier compared to the number of wallets with at least one Bitcoin. But it seems like even this growth driver is now history. We have peaked in the number of addresses with one BTC. This is coming down. And last time when this went up very quickly, it was during a bear market. So this is when many people bought into Bitcoin again for those lower prices. And then as the price didn't rally that much anymore, there was more profit taking. And what's very unique from the current decline from 125K to our current prices is that it's actually the long-term holders that are now selling. In the past, long-term holders tended to sell only into a rally. So what we see here as this colored area, that's the percent of Bitcoin that is held by the wallets that have moved their Bitcoin within the last year. So this is medium to short-term holders. There was more and more on-chain activity, more and more short-term holders as the price of Bitcoin went up. This was the usual structure. When we were in a bear market, it was the long-term holders that took over, long-term holders just dollar cost average into the market, and the short-term tourists, they exited. We have seen this time and time again, very little short-term holder holdings when the Bitcoin price was low, and much more when the Bitcoin price was high. But here is the change. The Bitcoin price has come down by more than 30% from its peak. Yet the Bitcoin that's held by short-term holders is not coming down. It's still elevated. We can also look at this the other way around, right? The long-term holders are currently not buying the dip. They're doing the opposite. Have a look at the number of Bitcoin that has been reactivated by the whales that haven't moved their Bitcoin for the last 4 to 5 years. So those are the people that ride the 4-year cycle. They tended to sell quite a lot at the end of 2018 when Bitcoin made a 100x return, right? From $200 to $20,000. So it does make sense that there's a lot of selling over here. But now Bitcoin has, relatively speaking, grown much less, but we see potentially even more selling by that cohort. It's at least equal to what we saw in 2017. Now there's the big difference this time, that we don't just have the whales that have held for 4 to 5 years. More and more wallets have matured further, and there are now whales that have held for 6, 7, 8 and 9 years, and those whales are selling now as well. This is additional sell pressure. So again, this is 4 to 5 years, but have a look at 5 to 7 years. There's even more selling pressure. Have a look at 7 to 9 years. Again, much more selling pressure now than there used to be in prior cycles. And we've got selling pressure by some wallets that have held for 10 years and more. And because of this long-term selling pressure, Bitcoin as a risk-on asset has a very hard time outperforming. What we are seeing here, that's the Bitcoin price relative to a NASDAQ 100 ETF. So this is an investment vehicle for technology stocks in the US. In the early days when Bitcoin was still fresh, it outperformed technology stocks massively by thousands of percent, by hundreds of percent. But we can see with each of those cycle tops, the relative growth is slowing down. We have seen very little additional performance since 2018. If you're getting value out of this content so far, then feel free to give this a like. You can also subscribe because I publish videos regularly. Of course, any support is very much appreciated. It will help the channel grow. If we sell off a bit further, we might even fall below that peak. If we compare the peaks, yes, there was still some outperformance, 85%. But if you look at 2021 to the peak in 2025, the outperformance was only 16%, while at the same time Bitcoin was much more volatile, right? It went down by 70% versus technology stocks. So the volatility, the risk that we take is much, much higher compared to the potential outperformance. And that's the fundamental issue. Now, why do I compare Bitcoin with technology stocks? Why don't I compare this with gold, for example? It's because Bitcoin still trades like a risk-on asset. When in general risk-on assets go up, Bitcoin goes up as well. When technology crashes on a given day, Bitcoin tends to crash as well. Have a look at the Bitcoin price at the top and at the Nasdaq 100 at the bottom. This year was COVID. The Nasdaq 100 crashed. Bitcoin crashed as well. Then we had the tops that formed at very similar points in time. We had the bottom that also formed at similar points in time. Again, we had some sell-off of technology stocks over here. We also had this in Bitcoin, and the correlation is of course not perfect, but there's definitely some overlap. It's almost like investing in Bitcoin feels like investing into an individual technology stock. And that's why the performance relative to other risk-on assets like the Nasdaq 100 is so important. And maybe because of this very meager outperformance from top to top, do we see all of those long-term OGs selling so aggressively? That's maybe why the long-term holders on average are not buying this dip as they did in the past. Now, what can we make of this market structure change? I believe it becomes more important than ever to time the market, because when Bitcoin is more volatile compared to other risk-on assets, we might take advantage of that volatility. We might long-term, if we just hodl, not make that much more money, but if we have a way to time the market better than the average market participant, we might outperform. Now, some people say that time in the market beats timing the market, but I only think that's true if you don't know what you're doing. If you look at the data, if you look at patterns that worked in the past, there is a possibility to be among the top investors that do make more money than the average. For example, we do not want to buy when the supply adjusted coin days destroyed is very high. So this is when old supply gets revived. Whenever somebody held, say, 10 Bitcoin and that Bitcoin hasn't moved for 3 years, we get 30 years of coin days destroyed. So the more Bitcoin has been held and the longer it was dormant for, the more this can spike when those diamond hands suddenly start selling. And they tend to sell at the peak of prior cycles. And they have been selling, as we've already mentioned before, quite aggressively throughout this bull market. And they are pretty aggressive with the selling one more time. It makes more sense to buy when the value days destroyed is rather low. Have a look at the number of Bitcoin that's held by the long-term holders. This tends to go down when we are in a bull run, right? The long-term holders take profit. It tends to go up when the price is going down, either because the long-term holders dollar cost average into the market or because some short-term holders turn into long-term holders and simply just wait it out. The difference this time around is that we see the long-term holders selling despite the price not going up. We can also mirror this chart. We want to sell when the short-term holder supply is very high. We want to buy when the short-term holder supply is very low. Unfortunately, now the short-term holder supply is very high, and it's not high because there's so much interest in crypto. It's not that many people now hear about crypto, they talk about this in media, and so many people are entering the space now, and that's why the short-term holder supply is high. This is high because the long-term holders are selling off. The reason why I say this is because just have a look at the interest in Bitcoin over time. This is the amount of search queries for Bitcoin. It peaked at the end of 2017 and in February of 2021. So that was also when the short-term holder supply was very high. This time the short-term holder supply is very high despite the interest being rather low. So this is not a short-term holder demand-driven structure change. This is a supply-driven structure change. This is the whales selling off. Timing the market becomes more important than ever. It becomes very important to buy when nobody wants crypto. It becomes very important to buy after Bitcoin has fallen by 70% versus tech stocks. So far, we might just be at the beginning of that move. We are 37% down versus QQQ versus the Nasdaq 100 ETF. And as long as the long-term holders continue to sell, the trend is likely going to prevail. Now, talk is cheap. It's easy to make YouTube videos say that the price will 10x or that we're going to see a crash. But really, what matters is what's the long-term performance. Are those people publishing on YouTube actually outperforming the market? You might have noticed that the majority of YouTubers never share their numbers. They never say how much they've outperformed a benchmark. They never say how much better they performed relative to Bitcoin, relative to the S&P 500. But I do believe that this channel is different. I do share my numbers, at least the relative numbers. This is my net worth over the last 4 years. So this is a monthly chart. And of course, it does include dollar cost averaging. It does include saving from active income. But here's my trading portfolio, the line in black, relative to if I had just dollar cost averaged into Bitcoin. And this is really in the end what matters, right? Does your trading activity outperform the benchmark? Most altcoins tend to underperform Bitcoin most of the time, and you're able to achieve that performance over several years, and you're probably on the right track. There is a lot of volatility in returns though. This is the alpha, positive and negative, versus buying and holding Bitcoin for each single month. The dotted line over here, that's the 12-month average. So on average over the entire time frame, the alpha is 1.6% per month. Do you see any other YouTubers sharing those kinds of numbers? Most YouTubers just say that you should buy this coin or you should buy that coin. But the problem is, especially the smaller altcoins, they tend to underperform massively. This is the performance of some smaller altcoins over the course of the last year. Many of them went down by 70%, by 80%, even by 90%. And so chances are you did not outperform Bitcoin if you just followed that advice. Chances are you've lost 50, 60, 70%. Now, nobody can know for certain where a price is going. Nobody has a crystal ball, but we can play the probabilities. Some assets are more likely to go up, other assets are less likely to go up. And when it's about probabilities, we simply use statistics. I've optimized various backtests, checking out the best leverage ratios, checking out the best systematic trading rules that actually do outperform just buying and holding Bitcoin over the years. And so for everybody that's done with this kind of crypto advice that ends in losses anyways, I have made some videos, some tutorial videos that actually build skill. I'm also running exclusive Q&A sessions every now and then. You can ask me your questions directly in a live stream. And then if you want to dive deeper, you can also get into the individual trades. I share all of my trades directly as well in real time. So looking very much forward to seeing you in the premium membership. The link to premium pops up here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. See you next time on YouTube or see you in premium. Cheers.